Question 1. Which of the following best describes the role of cyber insurance in a business's overall risk management strategy? A. Cyber insurance is solely for covering physical damages from cyber attacks. B. Cyber insurance is an optional risk management tool that provides coverage for financial losses due to cyber incidents without the need for other risk management practices. C. Cyber insurance works in conjunction with a business's existing cybersecurity measures and helps mitigate financial risks from cyber attacks, data breaches, and related incidents. D. Cyber insurance covers all cybersecurity failures, regardless of whether the business implements any preventative measures. Answer. C. Cyber insurance works in conjunction with a business's existing cybersecurity measures and helps mitigate financial risks from cyber attacks, data breaches, and related incidents. Explanation. Cyber insurance is not a standalone solution but should be integrated into a comprehensive risk management strategy. It helps mitigate the financial consequences of cyber incidents like data breaches, cyber attacks, and business interruptions, but businesses must also implement proactive measures, e.g., strong cybersecurity practices to reduce the risk of such events. Cyber insurance typically covers losses from these events, such as the cost of data breach response, business interruption, and legal fees. Without effective cybersecurity protocols, cyber insurance may not be sufficient to mitigate risks, and insurers may even refuse to pay out claims due to negligence or lack of preventative measures. Question 2. Mr. Harris operates a healthcare company in Rhode Island. Recently, a cyber attack resulted in unauthorized access to patient records, and the company is facing regulatory fines for failing to comply with data protection laws. Which of the following actions should Mr. Harris take regarding his cyber insurance policy? A. Mr. Harris should assume that his cyber insurance policy will cover the regulatory fines, as fines are generally included in cyber insurance policies. B. Mr. Harris should immediately contact his insurance provider to inquire about coverage for regulatory fines, as not all cyber insurance policies cover such fines. C. Mr. Harris should disregard the fines and continue business operations as normal, as regulatory fines are irrelevant to the cyber insurance claim process. D. Mr. Harris should wait until the fines are issued before contacting his insurance provider, as the insurance company can only cover the fines after they are finalized. Answer. B. Mr. Harris should immediately contact his insurance provider to inquire about coverage for regulatory fines, as not all cyber insurance policies cover such fines. Explanation. Cyber insurance policies often have specific exclusions related to regulatory fines and penalties. Some policies may include coverage for fines related to privacy violations or data breaches, while others may exclude them entirely. It is crucial for Mr. Harris to confirm the terms of his policy to determine whether such fines are covered. In some cases, insurers may provide coverage for fines under certain conditions, but this typically requires the insured to demonstrate compliance efforts and may only cover fines that arise from specific types of breaches or violations. Question 3. A retail business is planning to purchase a cyber insurance policy. Which of the following factors should the insurer primarily evaluate during the underwriting process to assess the business's cyber risk? A. The retail business's annual revenue and overall profit margins. B. The retail business's cybersecurity measures, including employee training, data encryption, and incident response plans. C. The retail business's historical financial performance and its debt-to-equity ratio. D. The retail business's location and the number of physical stores it operates. Answer. B. The retail business's cybersecurity measures, including employee training, data encryption, and incident response plans. Explanation. During the underwriting process, insurers evaluate the cyber risk associated with the business. This assessment typically includes an examination of the business's cybersecurity practices, such as whether it employs multi-factor authentication, MFA, conducts regular vulnerability assessments, and trains employees on cybersecurity awareness. Insurers also look at data protection protocols like encryption and the existence of a well-defined incident response plan. The strength of these measures directly impacts the business's likelihood of experiencing a cyber incident and the severity of potential claims. Financial metrics and the number of physical stores, while relevant to overall business risk, are less important in determining the business's cyber risk specifically. Question 4. Which of the following is a primary difference between first-party and third-party coverage in a cyber insurance policy? A. First-party coverage covers the cost of a data breach affecting customers, while third-party coverage covers the business's internal response costs. B. First-party coverage applies to losses directly suffered by the insured due to a cyber incident, while third-party coverage applies to claims made by others, such as customers or vendors. C. First-party coverage applies to regulatory fines, while third-party coverage applies to data breach notification expenses. D. First-party coverage addresses only business interruption costs, while third-party coverage is limited to media liability. Answer: B. First-party coverage applies to losses directly suffered by the insured due to a cyber incident, while third-party coverage applies to claims made by others such as customers or vendors. Explanation: First-party coverage addresses direct losses suffered by the policyholder due to a cyber incident, such as data breach notification costs, business interruption losses, and expenses related to crisis management and legal fees. Third-party coverage, on the other hand, is focused on the policyholder's liability for damages or legal actions taken by external parties, such as customers, partners, or vendors, who are affected by the policyholder's cybersecurity incident. This distinction is critical for businesses to understand, as it informs how they will be reimbursed for different types of claims. Question 5. Which of the following is a significant challenge insurers face when underwriting cyber insurance policies? A. Accurately predicting the impact of physical damage on business operations from cyber attacks. B. Assessing the financial viability of small businesses in the retail sector based on historical data alone. C. Quantifying cyber risks and the potential financial losses from emerging threats like ransomware and advanced persistent threats acts. D. Ensuring policyholders provide accurate revenue projections for future business operations. Answer: C. Quantifying cyber risks and the potential financial losses from emerging threats like ransomware and advanced persistent threats acts. Explanation: A significant challenge in underwriting cyber insurance policies is the difficulty in accurately quantifying the financial risk posed by emerging cyber threats like ransomware apps and other sophisticated attack methods. These types of attacks can vary greatly in their impact, making it challenging to predict potential losses with precision. Unlike traditional forms of insurance, where past claims history and physical risk factors provide a clear basis for underwriting, cyber insurance involves assessing highly dynamic, intangible risks that evolve with technology. As such, insurers must rely on complex risk models, cybersecurity audits, and expert analysis to estimate the potential financial impact of cyber incidents. Question 6. Scenario: MS Adams runs a financial consulting firm and has purchased cyber insurance. She recently discovered that one of her employees fell victim to a phishing attack, allowing hackers to access sensitive client financial data. What is the first step MS Adams should take according to the terms of most cyber insurance policies? A. MS Adams should immediately contact the hackers and attempt to negotiate the return of the stolen data. B. MS Adams should immediately notify her cyber insurance provider to initiate the claims process and report the breach. C. MS Adams should first consult with her IT department to handle the situation internally before contacting the insurance company. D. MS Adams should publicly announce the breach to the affected clients and local media outlets. Answer: B. MS Adams should immediately notify her cyber insurance provider to initiate the claims process and report the breach. Explanation: Under most cyber insurance policies, the first step after discovering a cyber incident, such as a phishing attack, is to notify the insurer immediately. This notification is important to begin the claims process and ensure that the insurer can provide necessary resources like forensic investigations, legal counsel, and public relations assistance. Delaying notification could result in a denial of the claim, as most policies require prompt reporting of incidents. Handling the breach internally or publicly announcing it before contacting the insurer could complicate the claims process or violate policy terms related to incident response. Question 7. Which of the following is an example of a coverage exclusion, a typical cyber insurance policy? A. Coverage for data breach response costs after a cyber attack. B. Coverage for the cost of restoring lost or corrupted data. C. Coverage for breaches caused by the policyholder's intentional actions or gross negligence. D. Coverage for legal fees incurred in defending against a third-party lawsuit related to a data breach. Answer: C. Coverage for breaches caused by the policyholder's intentional actions or gross negligence. Explanation: A common exclusion in cyber insurance policies is that the policy does not cover losses resulting from intentional acts or gross negligence by the policyholder This is because cyber insurance is designed to help businesses manage the financial consequences of unintentional cyber incidents such as hacking or phishing attacks. If the policyholder's actions were deliberately harmful or the result of extreme negligence, e.g., ignoring basic cybersecurity protocols, the insurer will likely exclude such claims. Coverage for data breach response costs, restoration of data, and legal defense are typically covered under first-party or third-party coverage, depending on the specific terms of the policy. Question 8. Which of the following cybersecurity measures would most directly reduce a business's cyber insurance premiums? A. Installing a new firewall without testing its effectiveness. B. Failing to implement employee training programs about cybersecurity threats. C. Implementing multi-factor authentication (MFA) and regularly updating cybersecurity protocols. D. Increasing the deductible for cyber insurance claims. Answer: C. Implementing multi-factor authentication (MFA) and regularly updating cybersecurity protocols. Explanation: cyber insurance premiums are largely influenced by the insured's efforts to mitigate cyber risks. Insurers typically offer low premiums to businesses that implement strong cybersecurity measures such as multi-factor authentication (MFA), encryption, regular software updates, and employee training. These measures significantly reduce the likelihood of a successful cyber attack, which in turn lowers the risk exposure for the insurer. Merely increasing the deductible may reduce the premium but does not directly address the business's risk profile, while failing to implement basic cybersecurity practices like training and MFA can lead to higher premiums or denial of coverage. Question 9. Which of the following regulations most directly impacts the scope of coverage for privacy breach liability in cyber insurance policies? A. The General Data Protection Regulation (EDR). B. The Payment Card Industry Data Security Standard (ECSS). C. The Health Insurance Portability and Accountability Act (HIPAA). D. The Sarbanes-Oxley Act (SOX). Answer: A. The General Data Protection Regulation (EDPR). Explanation: the General Data Protection Regulation (EDPR), a European regulation that has significant implications for privacy breach liability coverage in cyber insurance policies, especially for companies that handle the personal data of EU citizens. GDPR imposes strict requirements on data controllers regarding data protection, breach notification, and individuals' privacy rights. If a breach occurs and the business is found to be non-compliant with GDPR, it could face significant financial penalties and legal liabilities. Cyber insurance policies may be tailored to provide coverage for DDR-related privacy breaches, making it an essential regulation for insurers to consider when underwriting policies. Other regulations, such as PCI DSS or HIPAA, also affect specific industries but do not have as broad an impact on privacy breach coverage as GDPR. Question 10. Which of the following is a key benefit of including business continuity planning (BCP) in a cyber insurance policy? A. It guarantees that business operations will not be disrupted after a cyber attack. B. It ensures that insurance claims are processed faster by the insurer. C. It helps the insured to reduce financial losses by ensuring quick recovery and continuity of operations. D. It covers all regulatory fines associated with cyber incidents. Answer: C. It helps the insured to reduce financial losses by ensuring quick recovery and continuity of operations. Explanation: business continuity planning (BCP) is critical in mitigating the impact of cyber incidents on a business's operations. BCP ensures that the organization has the necessary procedures and resources in place to quickly recover and continue operations after cyber attack or data breach. Having a solid BCP in place can significantly reduce the financial losses resulting from downtime and disrupted services, making it an important component in the overall risk management strategy for cyber insurance. While BCP can help expedite recovery, it does not guarantee immunity from disruptions or cover regulatory fines, which are typically addressed separately in the policy. Question 11. Which of the following is typically covered under cyber insurance policies first-party coverage? A. Lawsuits filed by third parties due to a data breach. B. The cost of restoring lost or corrupted data after a cyber attack. C. Fines imposed by regulatory bodies for data protection violations. D. Legal fees related to defending the business in a class action lawsuit. Answer: B. The cost of restoring lost or corrupted data after cyber attack. Explanation: first-party coverage in cyber insurance policies is designed to protect the business itself from losses incurred due to a cyber incident. This includes expenses like restoring lost or corrupted data, business interruption losses, and the cost of hiring forensic experts to investigate the breach. Third-party lawsuits, regulatory fines, and legal defense costs are typically covered under third-party coverage or separate liability policies. Question 12. Which of the following best describes the purpose of a cybersecurity audit before purchasing a cyber insurance policy? A. To evaluate the business's revenue and profit margins. B. To assess the business's cybersecurity measures and identify potential vulnerabilities. C. To determine the premiums for coverage based on previous claims. D. To verify compliance with industry regulations like HIPAA or PCI-DSS. Answer. B. To assess the business's cybersecurity measures and identify potential vulnerabilities. Explanation. A cybersecurity audit is performed to assess the effectiveness of an organization's cybersecurity infrastructure and identify any weaknesses or vulnerabilities that could increase the risk of a cyber attack. Insurance providers may require such an audit before issuing a policy to understand the risk profile of the business. The results of the audit can impact the coverage terms, premiums, and policy exclusions. While compliance with regulations like HIPAA or PCI-DSS is important, the primary purpose of a cybersecurity audit in the insurance context is to identify and mitigate potential security gaps. Question 13. Scenario. A company experienced a data breach that exposed sensitive customer information. The company promptly notified affected individuals and offered them credit monitoring services. However, it also failed to notify its cyber insurance provider within the required time frame. What is the likely consequence of this delay? The insurance provider will automatically pay the claim without any consequences. B. The insurance provider may deny the claim due to late reporting. C. The insurer will extend the reporting period without penalties. D. The insurer will cover the entire loss but without any investigation. Answer. B. The insurance provider may deny the claim due to late reporting. Explanation. Most cyber insurance policies require prompt reporting of incidents to ensure that the insurer can provide timely support such as forensic analysis, legal advice, and breach management. Failing to notify the insurer within the required time frame may result in a denial of the claim, as the insurer might argue that the delay hindered their ability to assist and mitigate the damages. Timely reporting is critical in maximizing the benefits of the policy and ensuring that coverage is not jeopardized. Question 14. Which of the following would likely not be covered by a cyber insurance policy? A. The cost of repairing a website after a denial of service DOS attack. B. The financial loss caused by a ransomware attack that locks the company's data. C. The cost of replacing physical assets like laptops damaged in a cyber attack. D. The legal fees associated with defending the company in a class action lawsuit following a data breach. Answer. C. The cost of replacing physical assets like laptops damaged in a cyber attack. Explanation. Cyber insurance typically covers losses related to digital or virtual assets such as data loss, business interruption, and the costs associated with managing a cyber attack. Physical assets like laptops or hardware damaged during a cyber attack are generally not covered by a cyber insurance policy as they fall under property insurance. For physical asset coverage, a business would need a separate property or casualty insurance policy. Question 15. Which of the following would be considered a third-party claim under a cyber insurance policy? A. The costs associated with restoring company data following a cyber attack. B. The costs of notifying affected individuals and offering credit monitoring services. C. Legal expenses for defending the company against a lawsuit by a customer due to a data breach. D. The costs of upgrading the company's cybersecurity infrastructure. Answer. C. Legal expenses for defending the company against a lawsuit by a customer due to a data breach. Explanation. A third-party claim involves liability to someone outside the insured business, such as a customer or vendor. In this case, if a customer sues the company for damages resulting from a data breach, the legal costs to defend against the lawsuit would be considered a third-party claim. First-party claims, on the other hand, involve losses incurred directly by the business, such as costs for data restoration or breach response. Question 16. Which of the following scenarios would most likely trigger cyber insurance policy's coverage for business interruption? A. A hacker steals customer payment information. B. An employee's laptop is stolen, compromising sensitive data. C. A company's website is down for several days due to a distributed denial of service DDoS attack. D. A business receives a negative publicity after a data breach is revealed. Answer: C. A company's website is down for several days due to a distributed denial of service (DDoS) attack. Explanation: business interruption coverage in a cyber insurance policy typically covers financial losses incurred when business operations are disrupted due to a cyber event. In the case of a DDoS attack that causes prolonged website downtime, the company could face lost revenue, customer dissatisfaction, and other operational disruptions. These losses would be covered under business interruption insurance as the attack directly impacted the company's ability to operate. Question 17. Which of the following is most likely to be a coverage limitation? ECA cyber insurance policy. A. Coverage for breach notification costs after a cyber attack. B. Coverage for cyber extortion payments made during a ransomware attack. C. Coverage for losses incurred as a result of pre-existing vulnerabilities known to the insured. D. Coverage for legal defense costs related to third-party claims. Answer: C. Coverage for losses incurred as a result of pre-existing vulnerabilities known to the insured. Explanation: cyber insurance policies often have exclusions or limitations regarding pre-existing vulnerabilities, meaning that if the insured was aware of specific cybersecurity weaknesses or risks and did not address them, any resulting losses would not be covered. Insurers typically expect policyholders to maintain a reasonable level of cybersecurity hygiene, and failure to address known vulnerabilities could void coverage for related incidents. This limitation emphasizes the importance of proactive cybersecurity measures. Question 18. Which of the following is a key component of cyber extortion coverage in a cyber insurance policy? A. Coverage for physical damage caused by hackers. B. Coverage for the cost of paying a ransom to cyber criminals in a ransomware attack. C. Coverage for the loss of intellectual property due to unauthorized access. D. Coverage for business interruption caused by phishing attacks. Answer: B. Coverage for the cost of paying a ransom to cyber criminals in a ransomware attack. Explanation: cyber extortion coverage typically includes protection against threats like ransomware attacks, where cyber criminals demand payment, often in cryptocurrency, to unlock data or stop a disruption. This coverage reimburses the policyholder for the cost of the ransom payment. Subject to policy terms, it may also cover related expenses, such as legal fees and crisis management. However, paying a ransom is not always advisable, and insurers often work with businesses to try to recover data without resorting to payment. Question 19. What is the purpose of a data breach response plan ECA cyber insurance policy? A. To guide the insurer on how to file a claim for business interruption. B. To ensure the business knows how to respond immediately after a cyber attack. C. To outline how the business can secure better premiums from the insurer. D. To explain how the company can recover financial losses from a data breach. Answer: B. To ensure the business knows how to respond immediately after a cyber attack. Explanation: a data breach response plan is a critical component of many cyber insurance policies. It outlines the steps a business should take immediately following a data breach, such as notifying affected parties, securing the network, and contacting the insurer. Having a predefined response plan helps minimize the damage caused by a breach and ensures compliance with regulatory requirements. It can also help reduce the impact on the business's reputation and finances. Question 20. Which of the following scenarios would be covered under the network security liability portion of a cyber insurance policy? A. A server is physically damaged in a fire. B. Customer credit card information is stolen in a breach. C. Employees' personal laptops are compromised in a phishing attack. D. A company's website experiences a DDoS attack that causes financial losses. Answer: B. Customer credit card information is stolen in a breach. Explanation: network security liability coverage typically protects businesses against third-party claims related to security failures that lead to the exposure or theft of customer data, such as credit card information. In this case, if customer payment information is stolen in a breach, the business could be liable for damages, and the insurance would cover related legal fees, settlements, and notification costs. Other incidents, such as physical damage to servers or phishing attacks, are generally covered by different parts of a cyber insurance policy. Question 21. What is a proactive cyber risk management strategy in the context of a cyber insurance policy? A. Implementing policies to respond to cyber incidents after they occur. B. Assessing and mitigating potential cyber risks before purchasing insurance. C. Increasing the deductible to lower the policy premium. D. Offering credit monitoring services to affected customers after a breach. Answer: B. Assessing and mitigating potential cyber risks before purchasing insurance. Explanation: proactive cyber risk management refers to taking steps to assess and mitigate cyber risks before an incident occurs. This may include regular vulnerability assessments, implementing cybersecurity measures, and educating employees on security best practices. Insurers often require businesses to demonstrate proactive measures before issuing policies, as these efforts can lower the overall risk and reduce premiums. Question 22. Which of the following is typically excluded from coverage under a cyber insurance policy? A. Costs associated with defending against a lawsuit filed by a customer. B. Losses related to a breach of physical security, such as stolen hardware. C. Expenses related to notifying affected individuals after a data breach. D. Costs of paying a ransom demanded by cyber criminals during a ransomware attack. Answer: B. Losses related to a breach of physical security, such as stolen hardware. Explanation: cyber insurance typically covers losses related to digital security breaches, such as data theft or cyber attacks. However, physical security breaches, like the theft of physical hardware, e.g. laptops or servers, are generally not covered by cyber insurance. These types of incidents fall under property or general liability insurance, not cyber insurance. Question 23. Which of the following would likely be considered an exclusion under most cyber insurance policies? A. Data breach caused by a third-party vendor. B. Cyber extortion payments made due to a ransomware attack. C. Loss of data due to inadequate backup procedures. D. Loss of revenue resulting from a website downtime due to a DDoS attack. Answer: C. Loss of data due to inadequate backup procedures. Explanation: many cyber insurance policies include exclusions for damages caused by the insured's own negligence or failure to follow best practices, such as inadequate backup procedures. Insurers expect businesses to implement reasonable data protection measures, including regular backups. If a business fails to do so and loses data, this loss is typically not covered under a cyber insurance policy. Question 24. Scenario: a company's network is breached and sensitive customer data is stolen. The company has a cyber insurance policy but neglected to implement multi-factor authentication (MFA) across its system. What is the likely impact on the company's coverage here? The policy will cover the entire loss without any changes. B. The insurer will reduce the payout based on the company's failure to implement MFA. C. The company's policy will be cancelled immediately. D. The insurer will cover the loss but only after an extended investigation. Answer: B. The insurer will reduce the payout based on the company's failure to implement MFA. Explanation: most cyber insurance policies contain clauses requiring the insured to maintain reasonable cybersecurity measures, such as multi-factor authentication (MFA). If the company failed to implement these measures, the insurer may reduce the payout or deny part of the claim, arguing that the company's negligence contributed to the breach. Businesses are expected to follow industry standards and best practices to mitigate risks. Question 25. Which of the following is a benefit of having the cybersecurity training for employees as part of a cyber insurance policy? A. It helps employees identify phishing attempts and avoid clicking on malicious links. B. It ensures that employees are aware of the company's physical security protocols. C. It guarantees that all employees will have access to cybersecurity tools. D. It increases the maximum policy payout in case of a cyber event. Answer A. It helps employees identify phishing attempts and avoid clicking on malicious links. Explanation: employee cybersecurity training is essential for mitigating the risk of cyber threats, particularly phishing attacks. This training educates employees on how to identify suspicious emails, avoid clicking on malicious links, and follow best security practices. While it may not directly impact the policy payout, it can help prevent incidents that could lead to claims, thus reducing the overall risk and potentially lowering premiums. Question 26. Which of the following is most likely to be covered under the privacy liability portion of a cyber insurance policy? A. The costs of notifying affected individuals after data breach. B. The cost of repairing a damaged reputation due to negative press. C. Legal fees associated with defending against a data breach lawsuit. D. The loss of business income due to a system outage caused by a cyber attack. Answer: C. Legal fees associated with defending against a data breach lawsuit. Explanation: privacy liability coverage is designed to protect businesses from the legal consequences of a data breach or violation of privacy laws. This includes coverage for legal fees related to defending against lawsuits filed by affected individuals or regulatory bodies. While notification costs, say, are typically covered under other parts of the policy, privacy liability specifically focuses on defending against legal claims. Question 27. What is a cyber liability risk assessment, and why is it important for businesses to conduct one before purchasing cyber insurance? A process to determine the company's total losses after a cyber incident. B. An analysis of potential threats and vulnerabilities to the company's digital assets. C. An assessment of the financial health of the insurance provider. D. A review of the company's ability to comply with industry regulations. Answer: B. An analysis of potential threats and vulnerabilities to the company's digital assets. Explanation: a cyber liability risk assessment involves identifying potential cyber threats, vulnerabilities, and gaps in the company's cybersecurity measures. It helps businesses understand their exposure to cyber risks, which is essential when purchasing a cyber insurance policy. Insurance providers often require risk assessment to determine the level of coverage needed and to evaluate the premium pricing. Question 20. Which of the following is an example of a third-party liability risk covered under a cyber insurance policy? A. A company's data is deleted due to a cyber attack. B. A competitor sues a company for losing their proprietary information in a breach. C. A business experiences downtime as a result of a ransomware attack. D. A company incurs legal fees related to responding to a data breach. Answer: B. A competitor sues a company for losing their proprietary information in a breach. Explanation: third-party liability coverage protects the insured against lawsuits or claims from external parties, such as customers, vendors, or competitors. If a competitor sues the company for losing proprietary information due to a breach, this would be a third-party claim. Other scenarios, such as data deletion or business downtime, fall under first-party coverage, which covers the insured's direct losses. Question 29. Which of the following is a key feature of a business interruption coverage in a cyber insurance policy? A. It covers the cost of repairing a damaged server. B. It compensates for lost income due to a cyber event that disrupts normal business operations. C. It reimburses the cost of a ransom payment in a ransomware attack. D. It covers the legal fees associated with defending against third-party claims. Answer: B. It compensates for lost income due to a cyber event that disrupts normal business operations. Explanation: business interruption coverage compensates for lost income that results from a cyber event, such as a ransomware attack or system outage, that disrupts the company's normal operations. This coverage is essential for businesses that rely on digital systems for day-to-day activities and can experience significant financial losses if those systems are unavailable for an extended period. Question 30. Which of the following is generally not considered a cybersecurity risk under a cyber insurance policy? A. Employee negligence that leads to a data breach. B. A failure to implement proper data encryption. C. A physical security breach where hardware is stolen from the office. D. A vulnerability in the company's firewall that leads to unauthorized access. Answer: C. A physical security breach where hardware is stolen from the office. Explanation: cyber insurance primarily covers digital threats and breaches such as data theft, hacking, and system vulnerabilities. A physical security breach, such as the theft of hardware, laptops, servers, is typically covered under property or general liability insurance, not cyber insurance. Cyber insurance focuses on risks related to network security and digital data rather than physical security issues.